welcome. You're watching India Market Close. It's an interesting day of trade. The last hour will be even more interesting, especially after what we saw in yesterday's trade. Let's quickly take you through what's happening on the index, the broader markets, and the mid-cap and the small-cap moves as well. Like I said, trade is negative today. Some amount of profit-taking is emerging once again at higher levels. We saw exactly this take place at 3:15 in yesterday's day of trade. And that's largely what the street is doing this afternoon as well. Bank Nifty leading the losses, and that is a little bit of a concern. So Bank Nifty, remember, has provided leadership for the Nifty all through the December series. Jan, of course, seeing some pressure building up. 48,000 on Bank Nifty has also been taken out. The Nifty itself is up 21,700, 21,645 to be precise is what the benchmark currently trades at. Most sectors are trading weaker, barring pharma, which is still seeing some buying, especially after an upgrade that came in from Lupin. But let's quickly highlight the top gainers and losers on the Nifty before we move on to the other sort of broader market activity. Amongst your top gainers on the Nifty 50, you still have a bunch of counters that are trading positive. The breadth of the market as well is largely a 50-50 picture. Coal India continues to gain, was at an 8-year high yesterday, still trading at record levels in today's day of trade. Pharma, like I said, continues to see defense buying. So Sun Pharma is up 3.5%, Divi's Lab and Cipla both trading in with gains of about 2.5% each. So the top out of the top 5 gainers, 4 out of the 5 names are your large pharma names that are gaining within the range of 2 to 4% each. Adani Group companies back in the green, 2% in Adani Ports. Tata Consumers, BPCL, ONGC, ITC are a few gainers in early trade. Adani Ports, and that's of course news coming in, that could be one reason why the stock is up and about in trade. If I can just pull up the news that is flashing on the screen with regard to Adani Port. December cargo volume stand at 35.65 MMT, which is a 42% year on year. So big boost on back of that December numbers. Cargo numbers looking better than what the street was expecting. That giving a bump up to Adani Port in trade right now. 10 ports delivered highest ever cargo volume. So record highs on cargo volume delivery means better numbers for Adani Port. The stock cheering that move up 2.5%. Well, we've also got a quick check on the broader market because that will give you a sense of where really that profit taking is emerging. Like I said, IT is looking weak. You've got real estate looking weak. Banks aren't providing the support needed. The only sector that's actually holding up and keeping itself together is largely the pharma pack. Sameet Chavan, Head Research, Technical and Derivatives, Angel Broking, joined. And Sameet, afternoon. Yesterday at 3:15, the markets had a little bit of a break. Profit taking emerged at higher levels. Very similar sort of trade playing out today as well. We opened flat. Held out for most part of the day and profit kicking kicked in as well. The Nifty now sub 21,700. What are you making of the current sort of profit booking spiel that we are seeing?
Good afternoon. See, after seeing a massive vertical rally in last couple of months, nearly 3,000 points on Nifty, so that is around 12 to 14% in such a short span after without giving any major correction. So obviously, such kind of reality checks that we saw in the last half an hour of the trade and in the morning itself. So it is quite evident that we are likely to see such kind of surprises going ahead. But overall, the undertone is still bullish. If you see, some of the thematic moves that are playing well. The only thing is, banking and the auto sector, they are clearly sulking a bit. So that is providing some sort of pressure at high level. So for a time, you would expect, market to consolidate. So the range would be 21,700 to 21,850 on the higher side for Nifty. And, we don't see Nifty surpassing this mark, in next 4 to 5 trading sessions at least. Before this, we would see some sort of consolidation or minor profit booking also might get extended. On the low side now, 21,550 is the level to watch out for. So if, Nifty slides and sustains below 21,550, we could see extension of this profit booking and then probably another 250, 300 point correction could be on card. So as of now, we are seeing as a part of, consolidation. As of now, since last 3-4 days, we are seeing a time-wise consolidation and correction. And in case the important level of 21,550 gets breached on the lower side, we may see some sort of price correction as well.
Sameet, I'll talk to you about Bank Nifty and whether or not we might get some leadership from Bank Nifty. But just before that, I want to mark the pharma pack. So DVs is up on very large volumes. In fact, the volumes are 2.7 times the 20-day average. The counter itself is trading with gains of 2.5%. You've got Sun Pharma, where the options volume again is 2.2 times the average. Stock trades the gain of 3%. Simpler indicating and reflecting the same sort of trend. Sameet, this is interesting, right? Your pharma names are not just doing well, but the options volume is nearly 2 to 2.5 times the 20-day average. What are you making of these volumes and the fact that these counters are moving up on these very large volumes?
Yes, in fact, the entire pharma space has been bucking the trend since morning itself. Previously also in last 6 to 8 odd months, we have seen the entire pharma space doing well. They have given a V-shaped recovery from their 6 to 7 months lows. So from here on, we continue to see this upsurge getting extended. Today, clearly, we are seeing a lot of call writers unwinding their positions. The kind of intensity on the buying side that we have been witnessing since morning. So it clearly suggests that the call writers have ran for shelter now. So the momentum is quite strong as far as the Sun Pharma is concerned. It is very close to the 1300 mark. And probably next couple of weeks' time, will not be surprised to see this stock, happen heading towards 1380, 1400. But trade setup-wise, we like Devi Slab at current level. This stock has given a massive breakout from its previous hurdle. So we would expect the stock heading towards 4150, 4200 in next 3 to 4 trading session. So it's a buy from our end within the pharma space. The risk reward is quite favorable. As a trader, one can keep a stop loss around 3 and 4.
Sameet, you track Adani, and I'm talking about Adani Ports because the FY24 targets have been raised, record volumes in terms of port activity. Would you buy Adani Ports at these levels? Looks like there could be a breakout on the stock.
This particular stock has already given a breakout, last month itself when it first surpassed 850, 890. With massive volumes. Post this, we witnessed some sort of consolidation, and again, this upward trend is getting resumed now. As far as Adani Port is concerned, there's a challenge around 1100. So once this stock surpasses 1100, you could see a bigger rally getting unfolding in this particular counter. Then probably the stock may head towards 1150, 1180 in coming days. So as of now, yes, the kind of momentum it has picked up in last couple of trading sessions, the stock can get pushed towards 1100. But once it surpasses 1100, then 1200, 1230, these are the next levels to work.
Right, Sameet, let's change gears and talk about Bank Nifty. A massive rally on Bank Nifty in the December series. After months of underperformance, we saw a pretty sweet catch-up that took place. Of course, from the start of the Jan series, Bank Nifty has been seeing profit taking at higher levels, and now we are sub 48,000 as well. 0.7% cut, 380 odd points. What is the trade on Bank Nifty? Would you consider at this stage even going long on Bank Nifty, or you're best avoided maybe staying on the sidelines or even going short?
See, we would avoid going long at current level. In fact, in last 3 days, the entire banking space has been the weakest link. And today, the kind of weakness that we are observing, so it suggests that the 4 days back when Bank Nifty had surpassed 48,000, that breakout was clearly a whipsaw. So in fact, we would wait for the opportunity to go short. A minor pullback towards 47,950, 48,000 would make it an attractive risk reward for going short on Bank Nifty. In fact, keeping the stop loss in spot levels around 48,250, and we would expect Bank Nifty sliding towards 47,500, 47,350 in probably next couple of trading sessions.
Sameet, stay with us. There are a few other stocks that are, moving on back of very large volumes. Himansh joins us with the list of those volume buzzers. Himansh, do you have VST on that list? Big volumes on a bunch of counters this afternoon.
That's right, Samina, but unfortunately not in the top 5 at least. You have the likes of PDS Industries, Alembic Pharmaceuticals, Lemon Tree Hotels, Megmurray Organics, Glenmark Life Sciences, and so on that are buzzing on high volumes relative to their 30-day averages. Let's start with the Alembic Pharmaceuticals for one. We are seeing volumes nearly 19 times their 30-day averages, and this comes after the company, informed via a press release that it has bagged a quite substantial number of US FDA approvals in this quarter ended December. The company currently has a cumulative total of 196 ANDA approvals. 170 of them are final approvals and 26 are tentative approvals from US FDA. Then you have Lemon Tree Hotels, which is up nearly 16 times on volumes. The Lemon Tree Hotel jumps comes after Motilal Oswal raised the target price on this counter while maintaining the buy rating, citing improvement in the end market demands, essentially your Delhi and Bombay, given the increased activity coming in from convention centers. Then you have Megmurray Organics, which is really surprising to me because there's been no apparent news flow. The stock has been in a phase of very quiet consolidation for about a month, and today you're seeing it jump by 16% odd, which, and interestingly, when one looks at it fundamentally, the company has booked losses for the first 2 quarters of the first half of this year, and you are seeing margins decline, and chemical and specialty chemicals have been under pressure for the past year. So it's really interesting. We'll have to await more clarity on this one. Glenmark Life Sciences, again, too, no apparent news flow, but that's really been the top 4 and 5 buzzing stocks today.
Thanks, Amanj. But you know what's interesting right now is the fact that the markets are staging a little bit of a recovery, or well off the day's low point now, inching closer to 21,700. So you've got 21,670, 680. So after spotting that weakness around 12:30, 1 o'clock this afternoon, you are now, as we get closer to closing bell, actually seeing a recovery coming through the markets. Bank Nifty as well is off the day's low point. Auto is off the day's low point. Stocks like Adani have also picked up in trade right now. So, Sameet, this is an interesting play. At the same time, yesterday is when we saw the markets correct from the day's high point. And similarly, in today's session, what we are seeing is the exact opposite. The market's actually recovering from the day's low point as we get into the last half an hour of trade.
Yes, in fact, yesterday the selling, triggered post the 3 o'clock mark. So next 45 minutes would be quite crucial. More than the intraday movement, it is the closing point that is quite important for our market. So as I said, now on the closing basis, 21,650, 640 is the level to watch out for. If we manage to defend that particular territory, then we would consolidate at higher end. So 21,650 on the lower side and 21,750, 21,850 on the high side. That would remain the range. But once we slide and close below 21,650, 640, then probably in next couple of days we would see extension of this.
Some of your other smaller sectors that are actually doing quite well today is Citi Gas Distributors. So on a subdued day of trade, stocks like Gujarat Gas, MGL, IGL, if you can pick those ones up, all those counters are trading with a very clear positive bias. So MGL is up 1.5%. Gujarat Gas is the one leading the rally, up with a gain of 3.5%. IGL as well trading with a 1.5% move upward. Sameet, do you track any of these Citi Gas Distributors? In fact, oil and gas pack as whole, even stocks like ONGC are having quite a field day today.
See, within the city distribution gas space, we certainly like Gujarat gas. Obviously the low-hanging fruit is already gone. The kind of momentum that we witnessed in the last 3 days, a massive surge from the levels of 440 already. But looking at the slightly broader view, any decline from current level around say 490, 480 would be a good buying opportunity in Gujarat gas, and we would expect the stock outperforming its larger peers like MGL and IGL. So Gujarat gas is clearly poised for a move towards 525, 530 in coming weeks. So on any dip, it would be a good buy within the gas distribution company.
Do you track EIL, Sameet? Stock is up 12% as we speak. In fact, over the last 1 month as well, it's not done too badly, but 12% gains on a day like today.
See, clearly, in fact, this stock is now challenging its 2017 highs, which are around, 200, 205. Importantly, in last 3 to 4 days, this price move is backed by, massive volumes. So that clearly provides, some sort of credence to the move. And hence, will not be surprised to see this stock, surpassing to, 205, probably today or in coming trading session as well. And it would give a nearly 6 years price breakout for this particular counter. So next levels to watch out for would be around 222 to 230. These are the next levels to watch out for EI.
And the VIX. Well, Sameet, stay with us. I'll just quickly mark the markets and take a look at the breadth as well. The index, like we said, is off the day's low point. So we are now at about 21,678, still off by about 60 points in today's day of trade. But we've recovered by about 20, 30 points from the day's low. The broader markets, if I can just pull up the mid-cap and the small-cap space and get a sense of what really is happening, there is outperformance across the broader markets. The mid-cap index trading flat, small-cap index also not doing too badly in today's day of trade. Again, very similar to what we saw in yesterday's trade. The large cap is where we were seeing some pressure, but the broader markets continuing to look trade flat at best. A quick check on the breadth and the VIX index. Now, the breadth of the market is more or less a 50-50 picture. You've got 22 stocks moving up, while you've got 28 stocks that are declining in today's day of trade. Also, just to look at the VIX index, because that will give you a sense of the kind of uncertainty on the street. Remember, levels of 14.5 do indicate that the markets are volatile and there is some nervousness at higher levels. What you also want to make note of is that the VIX index has gone up nearly 37-38% in the December series, from levels of 10 to now about over 14.5. We'll take a break on that note. We'll come back, but we did catch up with the management of Bajaj Auto and Maruti on back of their robust sales. Remember, the numbers which they posted, the management does believe are good, but the street seems disappointed, and that is one big reason why auto stocks are actually selling off in today's day of trade.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry. Also, the fuel prices can go either way. Because of the geopolitical situation, it's possible that you could see spikes upward for the fuel prices, or if everything happens okay, you could even see a lower demand if overall demand for energy comes down, depending on the economic growth in other countries.
Triumph has had a very good impact. We launched in end of July with one model, and then we followed it up with introduction of the Scrambler in October. And both the offerings have been received extremely well. We are building an exclusive network for Triumph. So as of date, we've got about 55 stores over there. Last month, our retails were about 2,800 units or so. But, one has to look at the fact that these were perhaps in about 40 to 45 stores only, and because the rest of the stores came up in the second half of December. And in some places, the acceptance is such, like, Kerala, we are in Cochin and Trivandrum, which is a very important market for this class of motorcycles.
Welcome back. You are watching the last half an hour of trade as we gear up to a close that looks like it could be a day of profit taking on the street. But off the day's low point, 21,669 is what we have on the Nifty. Stocks like Coal India, Adani Ports, Sun Pharma, DV, Cipla, Dr. Reddy's, Tata Consumers are some of your top gainers on the Nifty. Amongst the broader market, stocks like VST are gaining 20-odd%. So that VST in the last couple of hours of trade has actually gained on very large volumes. The stock locked an upper circuit at 20% gains at 676 on VST. EIL, that's the other one I want to quickly bring up. About 12% gains on EIL is when I last checked. It is no different right now. 10.5% is what we have on that counter as well. Quick check of the other ones that are gaining in today's day of trade. You've got All Cargo Logistics. Remember, the business restructuring is what was a key trigger for the stock. They did a bonus issue today, and on back of that, All Cargo Logistics trades with a gain of 11%. We will be connecting with the management on the opening show tomorrow morning. It'll be interesting to know what's really changed for the company and what is leading to such a sharp rally in that counter. Well, along with that, you've got stocks across the broader markets, such as the pharma names, that aren't doing too badly either. Biocon, like I said, is up about 4.5%. But we've got with us G. Chokkalingam, founder and MD, Equinomics Research, joining in now. Afternoon, Chokkalingam. This is Samina from NDTV Profit. Great to have you on the show. First up, what are you making of the markets? We've started off Jan series on a fairly, tender note, if I may say, right? What we saw happen in trade yesterday, we made a new high, of course, but by the time we closed shop, the markets had sold off just a little bit from their highs. Very similar today. You are seeing some profit taking. Can this be attributed to rebalancing ahead of the earnings season?
Certainly, yes. I think the smart investors who are experienced in the market, they are tilting towards large cap and large mid cap stocks from small cap. Because since 2020 March bottom or 2020 December, the small cap index has outperformed the Sensex and Nifty by approximately 4 times when you see the incremental changes in these indices. Not only that, the market cap outside BSE 500 is about 35 lakh crore. Even if 10% of the small cap stocks come up for selling, there is no appetite. Thirdly, the small cap index is trading, nearly 34 times trading PE, whereas the Sensex trades only around 24 times. And if you go back to the history also last 16, 17 years, invariably and consistently, whenever such outperformance happened in the small cap, they got punished. They corrected their relative overvaluation by a big margin. So therefore, this is time to be cautious. But however, I am very bullish on overall Indian market. I still believe that in 24 also, we will see minimum 15% upside to Sensex and Nifty. So I am extremely bullish on Sensex and Nifty and also large cap and large mid cap. But I'm extremely nervous about the small cap segment.
You know, one sector I can't get my eyes off today is pharma. Across the board, the gains are rolling in. So from your large cap names that are seeing heavy buying, even the broader markets, so stocks like Sun Pharma, Glenmark, Mankind Pharma, Lupin, Alembic, GSK, all these, Glen Pharma, are all trading with gains of, anywhere in the range of 5 to 10% each. What did kickstart this rally, though, was a reiteration of a buy call coming from Nomura on Lupin. They have raised the price target on the stock, I believe, and also an Alembic Pharma, which is trading with very large volumes today. To tell us more about this, Anushi joins in. Anushi, what is happening in pharma? A buy call, an upgrade on the target price from Nomura on Lupin, saw very heavy buying emerging on the stock yesterday afternoon, continues in today's day of trade, and across the board, so from a Biocon to a Wockhardt to a GSK to a Mankind, all these pharma names are gaining on large volumes. What's driving the sector?
Right. So as you mentioned, pharma is the talk of the town today. Now, just coming to specifically three names that emerged out are the Lupin, wherein, as you mentioned, the Nomura's strong note had come out, wherein they have revised their target price to rupees 1,593 compared to rupees 1,290 earlier, implying about 23% upside. So the three reasons that stand out from the note are the EBITDA margin expansion that they are seeing in the course of next 3 to 4 years on the back of improving cost control measures that the company is taking, along with the new launches that are going to help in the operating leverage. Along with this, the US pipeline could also add into the growth story of the business on the current base, and India's on-field force expansion, especially in the chronic segment, is again going to add growth over here. So considering this, they have raised their EPS estimates for FY24 to about 8%, and on the high base they have raised their 25 EPS target as well to about 2% and 14% for FY26. Now coming to Fortis Healthcare, over here, not such a big target, but still implying about a 9% upside to rupees 475 target price. So this is again on the back of the company's improving average revenue per operating bed, which is stated to go above from 4% to 5.8%. Along with this, the brownfield capacity expansion that the company is making is expected to add in more value over the next 4 years. So that is on Fortis Healthcare. Now coming to last, which is Alembic, as you mentioned, is heavy on significant volumes, with their volumes buzzing at about 17 times its 30-day average and the stock hitting an intraday high of about 6%. So what is driving this volumes is basically the company receiving tentative and final US FDA approval for 8 products in the quarter for the third quarter, compared to about 6 approvals it had received in the second quarter. So this brings the total cumulative approvals of about 196, with 170 final approvals and 26 tentative approvals. So that's all on the pharma pack today.
It is exciting. Pharma stock is up and about. Nomura reiterating a buy call on Lupin with a price target of 1593. You've also got them increase their price target on Fortis Healthcare. Alembic seeing very large volumes as well. Chokka, do you track the pharma pack? Any stocks from the pharma sector you'd look to add? Is it looking good to you?
Yeah, generally investors can hold on to large pharma stocks, but I would prefer to hold Dr. Reddy and Sun Pharma. But otherwise, at Equinomics, we have a buy recommendation on Syngene International and Zydus Life Sciences. I believe that these two large mid-cap stocks can create a decent return in the next 6 months itself.
Do you track Biocon and Wockhardt as well? Again, the counters are looking very solid right now.
Yeah, I've gone quite deep into Biocon. I think, the kind of debt they build up at a consolidated level and increasing the balance sheet size anywhere from 5,000 crore to over 50,000 crore in the last 3, 4, 5 years and also getting into biosimilar product where the realization is going down across the world, I believe there is a potential risk. They may avoid the risk, but in case they get into risk, it could mean a lot for Biocon because of the huge buildup in the debt and balance sheet. And that is one reason I have picked up the Syngene, which is free from this. And they have been selling Syngene shares in the market to reduce the debt. And it's a very attractive stock. It's a defensive against rupee depreciation. And majority of the revenues are export revenue. So in case they sell also, a lot of buying will come in Syngene. That's why we recommend. But I would avoid the Biocon till you get a visibility of the management coming over the debt problem.
Right, Biocon is an avoid, but Syngene is a buy. That's Chokka's call from the Pharma Pack. We'll take a break. We'll come back on the other side. We get you the top buy today, sell tomorrow ideas from our guest. Back. There is some unfortunate news that is flashing on your screens. An update from Japan, really. Japan Airlines plane, I believe, is what we are talking about here. Fire has been seen in the fuselage of plane after it touched the runway. There are reports the Japanese airline plane may have collided with a Coast Guard aircraft. So, of course, after the earthquake and the tsunami, now you've got some bad news with the Japanese airline plane is on fire on a runway in at a Tokyo airport. Fire is seen in the fuselage of the plane after it touched down on the runway in flames. Not sure whether it was an empty plane or were there passengers on it, but we will continue tracking that news as and when we get some more information on that. But doing a little detour and going back to the market action, 21,691, not looking bad actually. If you can just get the intraday chart on the Nifty, it'll help you understand of what's happening. Bank Nifty 50 is staging a recovery, and interestingly, HDFC Bank is helping it move back up. Bank Nifty still in the red off the day's low point, but it's HDFC Bank that is at the day's high, and I think the buying there is what's giving some support to not just Bank Nifty but the Nifty 50 as well. Agam is standing by with more on the FNOQs. Agam, it's interesting. You are seeing profit taking, selling that's emerging at higher levels on the index. Bank Nifty also has not been able to provide its leadership in the last 2 to 3 days. But what I'm seeing right now is a recovery on the Nifty 50 being led by HDFC Bank, which has turned positive at the day's high point.
Yeah, well, you know, a lot of investors were and have been betting on the catching up as far as the HDFC Bank is concerned. I'll talk about that in just a bit. But when it comes to the indices, well, we are seeing some amount of weakness. And even though earlier on in the day, we had major indices will come off by around 0.6%. There's been an intraday recovery since then, and for now a 0.25% cut for the benchmark. But we haven't seen change in open interest, so not too much to speak for when it comes to positions being built in index futures. Let's bring up the Bank Nifty as well, and that's where, of course, HDFC Bank and the kind of up move will play a part for in there. And well, that's where we really haven't seen too much of an impact, at least on the index, because the index continues to trade with a cut of around 0.8%, and that has been the case since morning. Since morning, we've seen a very tight range as far as both the benchmarks are concerned, though we are looking at about a 5% increase in open interest when it comes to the Bank Nifty futures. Let's move on and talk about how things are panning out with respect to the options market. And for now, while there is a lot of resistance around the 22,000 mark, a little more open interest building up around 21,900. On the lower end, of course, 21,500 is the one where we're keeping an eye on. Until yesterday, we had maximum open interest around the 21,700 put. That has shifted lower to around 21,500. To pull up the Nifty Finance, and that's where we have the options expiry. As I was mentioning earlier today, you know, we've seen a lot of writing, and we had seen a lot of writing around the 21,400 calls as well as puts. But for now, it does seem like we're going to see expiry somewhere between 21,300 and 21,400 based on the kind of accumulation that we have seen across the respective calls and puts, and that's likely to have played out. Again, do remember that while the Bank Nifty has seen a sharp cut through the course of the day, that has not been the case for the Fin Nifty, reasons being the Bajaj twins, which have in fact traded in the green through the course of the day and also given a little bit of support as far as the Fin Nifty is concerned. Finally, coming down to stocks, let's pull up all those stocks which are seeing an increase in open interest. So we do have Delta Corp, Abbott, and Divi's Laboratories looking at fresh longs, shorts for Bata and Eicher Motors. Eicher Motors, of course, reacting to the weak volumes that we are seeing. And we are also looking at about a short covering for Bharti Airtel, UBL, Aarti Industries, and Siemens. On the other hand, longs and winding in LIC Housing Finance. Once again, continuing to keep an eye on the benchmarks, specifically the Bank Nifty as we move into the weekly options expiry tomorrow, Samina.
Indeed. So it's a weekly Bank Nifty expiry tomorrow, and what's really happened in the last few minutes is the broader markets, which were outperforming the benchmark, have now fallen more than the Nifty as well. So there is some more selling that's emerging in the broader market space. Mid cap almost at the day's low point again, and the small cap also seeing a little bit of pressure there. Sameet, HDFC Bank. HDFC, what are you making of this one? The stock has recovered in today's day of trade, pretty much at the day's high point. Would you consider initiating a long on HDFC?
No, I think we would avoid. As I said in my opening remarks also, Bank Nifty is the weakest link, from a trading perspective, and we were looking to short it at high levels. Yes, it has again come off quite sharply in last 10 odd minutes. So as far as the HDFC Bank is concerned, now the fresh buying would only happen beyond 1750. So if it breaks 1720, then probably we could see good move in HDFC Bank. So there could be two conditions: either wait for a breakout confirmation to surpass 1720, or else wait for a decent dip now. 1660 to 1640 would be the good accumulation level for HDFC Bank.
Right. Chokka, what are you making of the hospitality sector? Is that a theme you would consider playing for the next couple of quarters? And I ask you this in context of the pickup in business the sector has witnessed during the wedding season and the festive season. And more importantly, there have been a few brokerage upgrades. Lemon Tree is one counter that's actually doing really well in today's day of trade. Your view on the hospitality pack and your top picks from that sector? Chokka, you're on mute. I can't hear you. So do you want to unmute yourself first?
Oh, my apology. I agree with you on hospitality sector. I think the bullishness will continue even in 2024. Post-COVID, there has been a huge jump in the travel by Indians. And within that sector, I prefer East India Hotel Limited. According to me, that is a best stock in the entire pack. Apart from fundamental and relative valuation, ITC and Reliance Group together have about 35% stake, whereas the original promoter, Oberoi family, has only around 35% stake. I'm not forecasting that one of them will take over. My contention is that once ITC demerges the hotel business and as Reliance House keeps adding more hotels, there will be re-rating of valuation for this kind of hotel business where promoters do not have majority. There will be a lot of hope from the investors. Therefore, there would be re-rating of the valuation. Even otherwise, in relative valuation, it is cheaper compared to many other hotels. So therefore, my strong recommendation is EIH Limited, East India Hotel Limited.
Right. That's a couple of buy calls coming from Chokka. The hospitality space is a sector that he is constructive on. One big sector that will kick off the earnings season as early as 11th of Jan is the IT pack with TCS reporting numbers. More importantly, what we are seeing though is a tremendous amount of selling that's emerged in the IT pack over the last few days of trade. Across the board, the selling is being done. Now, the big question to ask is this portfolio is being rebalanced ahead of the earnings season? But before that, I believe there is a Citi research report that has revised the target price of the top 6 IT firms, citing some key monitorables. Tushar joins us with more on this. Tushar, you have a tap on this sector, and it was only a few days ago that we saw buying returning to the IT pack after the Fed, of course, talked about rate cuts earlier than expected, and the markets were excited, stocks were doing really well. The picture today very different. TCS kicks off earnings season on the 11th, but even before that, Citi doesn't seem too enthused by the space.
So thank you, Samina, for that. So what we have seen so far is there was a run-up in IT stocks so far, especially after Accenture's earnings. But now, after Citi Research's report, though Citi Research has raised the target price for the top 6 IT companies, all the top IT stocks have fallen. I think Nifty IT is about 1% down today. Now, that is happening is because the stocks was higher, are still trading at higher than what Citi is estimating them to be, the target price set by Citi. So that current market price is still higher. So essentially, we can say that the IT stocks are now correcting to the levels that Citi is anticipating, the target price that is set by Citi. Now, Citi is seeing demand uncertainty. It's seeing particularly in discretionary spending. It's still the same story as what we had seen over the last 4 quarters or so. What Citi says is that investors are bullish on the fact of the pace of recovery that we'll see this year, as well as the 2024 outlook. So how much of that is unsubstantiated exuberance, if you want to say? this is what we are seeing the correction right now. So I think this is the correction that was actually warranted in this space. Other things that Citi says that we have to watch out for is the guidance, the total contract value, the commentary about the fiscal that's going to come up, the headcount and the attrition, and the margin levers that the companies have to maintain the profitability at the level. So remember, we have not seen any. We have not seen any growth in revenue. Net profit has taken a hit over the last 4 quarters, but the companies have been able to maintain their profitability at the levels they're expected to. Now, that was when they employed those levers. Now they don't have it. So what we need to watch out in Q3 and the commentary for the rest of the year is what are the rest of the margin levers that these companies will have to maintain their profitability. Samina.
Right. Tushar, that's very interesting indeed. Let's talk about earnings, right? Because I know you've been maintaining this over the last couple of weeks at least, that, the street was getting ahead of itself because earnings will be muted even this time around for the IT pack. Can you elaborate on that? How do you feel? I mean, what are your sources saying? You're probably going through a couple of reports. Too early, I know we'll do a little more detail about this over the next few days, but as the street gears up, what is the expectation on the IT pack?
Samina, the most important thing to remember right now for the third quarter earnings that will come up from the 11th by TCS is we have to realize that Q3, the October to December period, is traditionally and seasonally a weak quarter for the IT companies. That's because of furloughs and a fewer number of working days that we have during the quarter. So essentially, it's already a seasonally weak quarter, and given the pain that the IT pack has been for the rest of the 2023. I think it will be even weaker as compared to what we normally expect it to be. So the run-up in the share price has been only because of how investors are anticipating 2024 to pan out. That also it will not look as rosy as what they are anticipating to be, as what Citi showed right now. So I don't think there'll be any surprises, positive surprises in Q3 results, but I think we should be wary about some negative surprises as far as some of the top IT names are concerned. Samina.
Indeed, Tushar, of course. We'll chat more and get some more on that over the course of the next few days as the street gears up to see what TCS has to report on the 11th of Jan. So the earnings season kicking off with TCS reporting from the IT pack on the 11th of Jan. Well, IT, Chokka, what are you expecting from the earnings season? There has been a report by Citi, and that could be attributed to the sell-off that we're seeing on the IT stocks today. Any concerns, any bets here, any sort of strategic or maybe a tactical call ahead of earnings season for the IT pack?
Yeah, I have a firm view. I may be wrong, but I have a firm view on IT space. In dollar term, IT exports are growing in over single digit, around 4 to 6% for the last 3 years in a row. Now we have more pain in terms of slowdown in the exports. On the other hand, if you look at the oil price, it is down 18% from 3-month high, despite problem in Red Sea, Palestine, Israel, and Ukraine. The oil price is so weak. So I believe that oil price can crash. That will help India to improve the exchange rate, which is staying around 83 level for long. There is a possibility of rupee appreciating. That again becoming a negative for IT space. So only those conservative investors who want to protect what wealth they already created in 2023. They continue to hold on to large IT stock. Otherwise, one should sell them and go to stock sector like the banks, where even now the banking credit growth is growing at around 16% year on year, which is close to record high level. And within the IT space, we have, as you mentioned, a tactical call. We have a tactical call on Explio Solutions. It's a small cap IT stock. It is down a lot from 52-week high. And recently they merged 4 private companies with a listed company. And I have a belief that this particular stock, because of this consolidation, can get re-rated and possibly it can create a good alpha. So therefore, I would stick to just selective name like Explio. Otherwise, we have given a sell call almost on all large IT stocks.
Well, just a quick mention, Adani Ports is at the day's high point, gains of nearly 3%. Cargo volumes for Adani Ports SEZ have jumped 42% year-on-year in December 2023. The portfolio ports deliver 300 MMT cargo milestone in a record 266 days. And on back of that, the stock is trading at the day's high as we speak. The chart right in front of you there at 30 odd rupees is what we have on Adani Ports. Sameet, we were talking about IT with Chokka. Do you have any calls on the IT pack? Maybe even any short trades on the IT stocks?
No, I think we would avoid going short on IT. In fact, Wipro is the one stock, which has been a bit laggard within this IT space. But in last month or so, it has started to give some sort of catch-up move. Importantly, in last 2 weeks, the kind of volume activity, the rise in volume that we have observed is encouraging. And last week, the stock prices already confirmed a breakout from its multi-month levels of 450, 455. So within this pack, rather than going short at current level, we would rather wait for Wipro to come around 450, 455, which would make it an attractive, risk to reward the candidate within the IT space, and we would expect some catch-up to its larger peers now. So Wipro is the one stock that can be accumulated around 450. Stock would be around 424, and we have a positional targets on this stock 498 and then 525.
Right. Sameet, any trading calls, any stocks that or strategies that you would implement in the next few minutes? Buy today, sell tomorrow kind of call?
See, we have a couple of ideas. One would be on the long side and one would be on the short side, considering the overall, selling pressure that we are observing at high levels. So on the buy, it would be pharma space, which has been buzzing since morning. So Davies Lab, which we have already discussed. So Davies Lab looks good for a BTST kind of trade. 3940 would be the stop loss level and 4150 is the target that we are expecting probably tomorrow or day after tomorrow. And on the short side, since the entire auto space is clearly seeing some sort of selling pressure, Escort is the one stock that has given a breakdown from its important support level. It has confirmed the inverted flag pattern. So we expect Escort to correct toward 2805, which is our target for this short call. Stop can be placed around 2935.
Right. Chokka, I know it's not expecting you to give me a buy today, sell tomorrow kind of call, but any tactical calls? We're going into the earnings season. Any stocks that you'd be looking to add to your portfolio right now?
I would give a tactical call on KCP Limited, a small cap. I believe that it's a multi-bagger stock. We personally also hold the stock. I expect good results from December because of its sugar business in Vietnam and also cement business in Andhra.
Right, KCP, that's the buy call coming from Chokka ahead of earnings season. They own the stock on their portfolio and are recommending it to our viewers as well. Well, sugar has been also in the news. In fact, we caught up with the management of Balrampur Chini on how the government is easing restrictions on ethanol affects the company, while also opening up other avenues. Listening to what the management had to say, and then, of course, we'll get a fundamental and technical view on Balrampur as well for you.
For the ethanol year 23-24, government has already put in a cap of maximum 17 lakh tons of sugar diversion to happen into ethanol through B-heavy as well as juice route. Now, if we go by this, then there is no further scope for any incremental diversion to happen in B route as well as juice route. So if we take this into consideration, I believe most of the companies have already rejigged their operating plan for the ongoing ethanol year 23-24. So Balrampur Chini has also rejigged its plan. Earlier, we tendered 10 crores of juice-based ethanol, which has now been revised to 3 crores. We got our allocation for B-heavy, which is around 11.5 crores. And C-heavy, we will be doing around 3.5 crores liter. Rest in the form of ENA as well as the grain-based ethanol. So this is the revised operating plan as far as our company is concerned. And with 17 lakh tons of sugar going maximum into ethanol, and if I can speak on the balance sheet of sugar for the country as a whole, then we started the year with 57 lakh tons of sugar. Expected production as per release given by ISMA is around 317 lakhs after taking into consideration 17 lakh tons of diversion. Consumption would be in the region of around 285, max could be 390. So there is enough inventory which the government has built up. 57 is expected to go up to a level of around 75 lakh tons of sugar. So there is no reason to believe that the increment in B-heavy route as well as juice-based ethanol prices will not happen. It will definitely be linked. It is linked with the FRP increase. So that revision is on the cards now.
Sameet, sugar stocks, anything there? Any trades in the sugar pack? Yesterday, a lot of these counters were trading firm. Today, of course, we are seeing some amount of weakness in the likes of Balrampur Chini.
Overall, if you see the entire sugar space, which has been consolidating of late, Balrampur Chini, which has already corrected quite sharply from the high levels of 480, and it is now in a consolidation mode. So on the higher side, 420 is the level to watch out for. Lower side, 370. We would expect some more consolidation in this counter before it is unfolding the next leg of the rally. So as of now, there is no clear trade in the within the sugar span.
Chokka, quick word on the oil and gas pack. Your OMCs have been doing quite well today, in fact. They've recovered from the day's low point. HPCL, BPCL, IOC, all trading firm. Even upstream, so ONGC, GAIL, Citi Gas Distributors, there has been consistent buying in this space, at least in the last 2 to 3 months. You think this trend is sustainable? What are you expecting from the oil and gas pack this quarter? And any stock in the pack that you're constructive on?
I firmly believe that it is not sustainable. One should use this opportunity to book the profits. Oil and gas, the stocks are cyclical, the business is cyclical because of government intervention and also being an election year. So to be safe, maybe one can buy and hold stocks like ONGC and Oil India. I think Oil India is the best bet because they are tripling the refinery capacity and also one of the major producers of oil. Their cost is much lower than even the current global oil prices. So except these two stocks, I am not that optimistic on remaining stocks in the oil and gas. Of course, we have a buy call on Reliance that is not for oil, more on unlocking potential from other business verticals.
Right. That's the view coming in on the oil and gas pack. The stocks like Reliance Industries as well being mentioned. Sameet, we are running out of time, so I'll try and quickly get a few calls from you on, other sectors, smaller sectors maybe. So stocks in the fertilizer pack, those have been doing quite well. Auto ancillary, until a few days ago, was seeing quite a lot of buying. Sugar, we've already talked about. Any of these smaller sectors that may continue to gain on sector rotation, so stocks specifically that you would go long on, any trades there? And it doesn't have to be for tomorrow, maybe for the Jan series, really.
See, I think the entire fertilizer space, has seen some good signs of revival in last 3 to 4 weeks. Chambal Fertilizer is the one stock that we have been closely tracking since the levels of 290, 300. This stock, was a laggard for nearly 12 to 15 odd months. But last series we saw a decisive breakout happening from the levels of 295, 300, and since then there has been no stopping. But considering the broader picture, will not be surprised to see the stock even heading towards 440, 450 in coming months. So any minor dip probably towards 360, 65 would be a good buying opportunity in case of Chambal Fertilizer. So we like this counter, and within this space, the stock is likely to outperform its some of its peer counters.
Right. Chokka, what about you? Smaller sectors like fertilizer, we've been seeing consistent buying now over the last 2 days in the pack. Any of the fertilizer names you like? And also, what is the reason for seeing an increase in buying activity in this pack?
Yeah, the reason for buying, in fertilizer is, as all we know, every week 8 to 10 lakh new investors are coming. They are continuously buying a lot of small caps. If you ask me, this is the best time to sell fertilizer stocks because A, the Kharif crop area was down. Now ongoing Rabi crop area is also down. C, water storage in the major reservoir is significantly down. The fourth reason is that the government is pushing nano fertilizer, which is substantially lower than the chemical fertilizers. And also the subsidy bill overall is giving a lot of burden. And this is the election year.
Right.
So there would be limitation on subsidy for fertilizer. Therefore, one should sell fertilizer stocks.
Right, so it's a sell call coming on fertilizer stocks. Sameet, Chokka, thanks a ton for joining us today on the show. It was a pleasure to chat with both of you. In the meantime, it's time to wrap up today's day of trade. It was volatile in a tight range. The Nifty going home with a cut of 77 points. 21,661 is what the Nifty closes at. Remember, it made an intraday high of 21,755, but finally seeing a cut of about 80 odd points by the time we are closing shop. Off the day's low point, but still ended the day on a weak note. In terms of Bank Nifty, the pressure is being very evidently felt. Bank Nifty down over 1%. Second straight day of losses coming in on Bank Nifty. Across the broader markets, you are seeing a lot more activity. So those small and the mid-cap index weren't doing as bad as the benchmark itself. In terms of movers, pharma was in a sweet spot. IT, auto were the big losers. Banks also lost. But in terms of the top few gainers, the EVs lab was topping the list with gains of 3%. Adani Port played a pretty sweet catch-up, smart catch-up to say the least, up about 3% to close the day. Sun Pharma, Coal India, Cipla, Dr. Reddy's are some of your top gainers. OMCs, upstream companies, City Gas distributors all doing a turnaround. All those counters going home with gains in today's trade. On the sell side, you had pressure on Aisha, which was down 3.5%. M&M did quite badly. IT Pack, Tech Mahindra also had some pressure. Wipro not doing too well. HUL, Infosys, HCL Tech are some of your top losers in today's day of trade. So all in all, a volatile day of trade, profit taking seen at higher levels. But of course, supports on the Nifty and the Bank Nifty were also respected in today's trade. Well, thanks a ton for tuning in. Join us again for more market insights and updates. Until next time, have a great evening. It was another day of consolidation on D Street. Profit taking was the center of market action today. Well, the Nifty traded in a 200-point range, opened at 21,751, but finally went home with a cut of about 4. Nifty, guys, sorry. Yeah. Oh, sorry, I didn't even see. Look back. Yeah. Start. This looks so funny, no? Wait. Yeah. It was a day of consolidation on D Street. Profit taking was the center of attention and on everybody's mind in terms of today's trade. The Nifty traded in a 200-point range, opened at 21,751, finally went home at 21,665. But what bulls will take heart from is the market did close at the day off the day's low point. Bank Nifty was leading the losses in today's day of trade. 1% cut on Nifty Bank, below levels of 48,000 on Bank Nifty. Broader markets outperformed the benchmark once again. The mid cap and the small cap again seeing some sort of buying that emerged in the last few minutes of trade, taking it off the day's low point. Mid cap and small cap both going home flat in today's session. Well, let's quickly take you through the sectoral movers because there were a few sectors that were actually helping the market in today's day of trade. But the one big sector and the talking point which was yesterday and today has been the pharma pack. Nifty Pharma going home with gains of 2.5% in today's trade. Media didn't do too badly. Metals also saw some buying. Energy saw a little bit of a pullback in the last hour of trade, with the OMCs and upstream and city gas distributors actually seeing some buying in the session. On the sell side, the list is far more extensive. Nifty Autos was down 1.4% on back of disappointing December sales numbers. IT seeing some balancing and profits being taken off the table ahead of the earnings season. Real estate was down about 1%. Bank Nifty, like I said, continued to lose ahead of options expiry tomorrow. MNC, services, finance and the PSU Bank Index also seeing a little bit of selling in today's day of trade. All in all, it was an interesting session. It was a 200-point range on the index, but more importantly, this was the breadth of the market. Towards the end, the bias clearly was on the sell side, but there were a handful of gainers in today's trade. Like I said, pharma was leading the pack. So you had DVs, Sun Pharma, Cipla, Dr. Reddy's from this pack of pharma majors gaining pretty substantially in today's session. Across the broader markets, you had the likes of an Alembic, Lupin, GSK that also went home with very sharp gains. Adani Port reported very solid numbers in terms of port sales that we've seen, 42% higher year on year. On back of that, you're seeing a very sharp gain of nearly 3% on Adani Port, the stock going on at the day's high point. Like I said, HPCL, BPCL, IOC all saw some gains coming in. Coal India building on its rally from yesterday, trading at record highs, about 2.6% on Coal India is what we had. Well, if you look at the sell side, the picture is far worse actually. So you had auto stock stocks that got beaten down in today's session on back of disappointing numbers. So Aisha, M&M, all doing quite badly. Hero MotoCorp, Maruti or Bajaj Auto all went home with cuts in today's session. HUL was down 1.5%, and IT stocks also seeing some weakness in today's trade. Well, it is profit taking at higher levels. That's what we are seeing. Global cues have been mixed as well. So there will be enough and more to watch out for when global markets, when US markets rather come back to trade later today. And that will, of course, be the driving factor in early hours of tomorrow's session.
Benchmark indices break their 7-day gaining streak and close in the red as IT and auto stocks drag them lower. Broader markets also outperform. Pharma and healthcare indices surge 2% each. HUL's large pack strategy